All right, traders, a very good evening to you all. This is Avril from the Tradepsyche, and I welcome you all to the post-market analysis, outlook, and expectations from the market for the next week. For Monday, the markets are closed, so we will do the analysis for Tuesday, which is 27th of January, and ahead of the budget day. Right, we have to discuss that how will we deal on the budget. So I will try to bring out a separate video that what generally happens around a major event, right? Whenever the major event is around like RBI policy, Fed cut rate policy, or the budget policy, the budget of the country's budget, right? So how do we deal with it? What generally happens and what happens? The most important part, what happens after the budget? Right. So we will discuss that probably in a separate video. But in this video, we'll discuss that what will be some of the crucial levels for Tuesday. How can be the next way for the markets, whether the markets can stay bearish or bullish, and are there any positive or negative global flows? Right. So we will discuss that and the kind of fall which we have been seeing in past 3 weeks. I think last to last week we saw a very good fall from 26,300 to roughly around 25,600, 25,500. Then 1 week of pause we saw, and then this week, the week which just went by, we saw a crash type fall in the market. So why this is happening and till what point we can, fall, we will discuss each and everything in detail. So stay hooked to this video. And I expect that you will not go empty-handed after seeing this full video. This video is a weekly analysis video wherein we discuss Nifty, Bank Nifty, and also other sectors so that you get a holistic view, a 360-degree view of the market, that which sectors you can concentrate for the bullish opportunities, which sectors you can concentrate for bearish opportunities. Right. But before starting the analysis, I would like to mention that I'll be leaving the link to my Telegram group in the description box below. If you are an active trader in the market, do look to join that group. We share daily from Monday to Friday. Whenever the markets are on, we share live markets commentary that whether the markets can go bullish, bearish, or what is the OI data saying, where is the bias. We do each and everything about the markets. We share different charts on different trade views, right? So we will guide you we will help you in making money. We will guide you in how to make yourself a better trader, right? So I will be leaving the link to my Telegram group. Do check it out. It has a nominal fees for joining that group. If you want any concession in the fees, let me know, email me or ping me on the Telegram, right? I'll be happy to help you. All right, so let's start the discussion. I'll first address the fact that there are any positive or negative global news flows. As from my perspective, there are no negative because in I think last weekly analysis video, what we discussed was um, the US tariff news and the attack on Iran, or and maybe the front from the war front, that was negative. But last weekly analysis video, what analysis we did, we will discuss that on weekly time frame. Thursday, what analysis we did, because for Friday the video didn't come. Apologies for that. But what did we actually discuss last week, right? And apart from that, how can be the next week? In next week, I think there are only four trading sessions from Tuesday to Friday. So the DK for the monthly expiry, we will be directly opening on the monthly expiry. So the DK will be very rapid. So we'll discuss that. And apart from that, we'll also discuss some of the commodities as requested by some of the viewers that try to include the commodities. So we'll also discuss gold view, silver view, crude, natural gas, if the time permits, because I want to keep the time less than 30 minutes. All right, so let's start with the video. I'll straight go to Nifty 50 chart. I'll remove each and every drawing, each and every support line. Right. So since the month is also about to end, I'll first go to the monthly time frame. And on monthly time frame, right, what we discussed, I think last to last week, if you remember, at this point of time when this doji big, happened. So the monthly, let me mark this level when we were at this point of time, right? So we were at this level. We were exactly at prior monthly low, and which we discussed. I'll leave the link uh, to my prior weekly analysis video, please just go and once watch. You will be better be able to relate that what we are discussing, and these are the ongoing discussions, right? It's not something where we, discuss in between. Right. So when the markets were at this place, we discussed that the markets they look bearish, at least from weekly perspective, because a big red candle has happened, and we told you that this is looking very much similar to this candle. So a week of 2 weeks or 3 weeks of pause can come, then continuation can come. But rather, what happened is only a single week pause came, and why this big red candlestick happened is because I'll tell you. It was a confluence of many factors. Donald Trump announced a tariff or 25% extra tariff on the EU on all the EU nations who are not agreeing with him on the Greenland stuff, right? Secondly, HDFC Bank and Reliance, they were both continuously falling from so many days. So I'll try to probably open Reliance chart and HDFC chart. So what happens generally is, see how the index falls so many points is when the two heavyweights of the index, Reliance has almost 15 to 20% of the weightage in Nifty 50. HDFC Bank has relatively less percentage of weightage in Nifty. But when these two heavyweights of Nifty 50, if they are falling, so naturally your index will also fall. And when your index will fall, so what it will do, it will start breaking crucial support levels. When it will start breaking crucial support levels, what it will do is, because many traders they trade Nifty 50, right? So it will start triggering a chain reaction which will internally trigger SLs of all the traders. So what was happening is HDFC Bank's result was not, taken positively by the street. As we discussed in last week in analysis video, we'll definitely go to the banking chart, Nifty Bank chart, and we discuss what exactly has happened there. But I clearly mentioned that if banking results are not cheered by the streets, Nifty Bank will fall. It fell with Reliance. Reliance was already falling due to decent results and also this Venezuela oil issue, right? And apart from that, HDFC Bank also joined the party. Why HDFC Bank also joined the party? Because it did not see any good results. So when two heavyweights were falling, Nifty had to fall. And when Nifty was falling, it was breaking one support one by one. So when one support was breaking one after each other, it was a, kind of a chain reaction. One level broke, SL got triggered for the lower level. Since SL got triggered for the lower level, more fall came. Since more fall came, other SL also got triggered. So a kind of chain reaction got triggered, and up till now, that chain reaction has not been completed. Right. So from monthly perspective, this was the reason that why we are falling so much, because it was a confluence of so many factors, the geopolitical issue, the war issue, even like we would not have fallen so much if the results would have been good. Frankly, I'm frankly saying this too. If the banking results would have been good, if the Reliance results had to come, if they would have come good, then this fall would not have been this much aggressive. Yes, due to geopolitical reason, there might be some shock to the market, but if domestically we are strong, then I think buying will come. But domestically also we are weak. TCS, Infosys, only Infosys was the only IT stock which saw a good result, but HDFC Bank, Reliance, nobody saw a good result. Everybody is seeing flattish to negative results. So definitely the markets had to fall, because when two heavyweights of a single index they are falling rapidly, it will definitely trigger index SLs on the downside. So that's what happened at this point of time. And we mentioned that this is the prior monthly low, and we have on week basis, we have exactly closed on prior monthly low basis. If at all we start going below 25,700, 25,650, this we discussed last week in last weekly analysis video, then I think the level of 25,000 will be achieved, and it got achieved. Right now, I'll remove this level. I'll mark this prior monthly high because when we will be entering into February, this prior monthly high will be very, very crucial because if you want to positionally go long on Nifty, I'll suggest better to wait until this 26,360 or 26,400 is not taken out. Above this, if at all we start closing on daily basis or weekly basis, I think 27 we can achieve, 27,500 and 28,000. But positionally, if someone comes to me and says this to me that above which level you can go positionally long in Nifty, I'll definitely say 26,400. About 26,400, I'll definitely buy a call hedged with a put, or I'll buy a future hedged with a put, or I'll sell a in the money put. Whatever I do, I'll take a bullish position and I'll target for 27,000 and 28,000. But unless and until 26,360 or 400 does not get breached and sustained, you cannot think of going long. On smaller time frames, we'll definitely see that what are the lower levels above which we can go bullish. But as of now, positionally bullish only about 26, 380 or 400. Right. Now, on the downside, since this month is about to end, on the downside, we do not know that how much extension of the fall will happen in the month of January. But from my perspective, this is not the monthly low, right? From my perspective, let's start going, I'll point out a good support, good monthly support is 24,600. Below 24,600, you can see 24,300. Below 24,300, it will be a massive, massive crash to 24,000. And if at all 24,000 gets breached, 23,000 and 22,000, right? All right. Now we'll go to weekly time frame since the on the monthly basis, this monthly candle has not closed as of now. Right. From weekly basis, last week analysis video, what we discussed is essentially that after 1 week of pause, we have this range in our mind. What was the range? 26, 25, 900 was the range, and 25, 480 was the range. Specifically, we discussed that the moment if we try to break, because the weekly closing was around roughly 25, 700, 25, 680. But the moment if we start breaking 25, 500, because this was the last support here at this point of time, and just below that, back to back three green candlesticks formed. So next support is 24,600, and I'm damn sure the markets, like I have a high probabilistic event that market will hit 24,600 because the markets, I do not see any support here. A small fundamental support is 24,900, but a big support, if you can see, the next big support is 24,600. If the markets have to bounce, they will bounce off like this from 24,600. Right? So how to trade now? Currently, we are at 25,000. So how to trade this 400 points? I'll tell you on smaller time frame. But we have the moment last week, what we discussed, that the moment we'll breach prior week low. That's why, and in my each and every videos, I continuously discuss that the prior weekly lows and highs are very important. Right? Now, I'll remove this level. But since 20, the level of 25, also one more thing. Note down this point that the whole round number levels 25,000, 25,500, 25, 26,000, 24,000, these are all psychologically very important levels. Breach of these levels is an indication that a major absorption of longs or of bulls have been happened and the bears are ready. Just imagine from price action perspective, if now we start crossing above back again on 26,000, above 26,000. So what investors, what traders will think? That yes, the markets are going bullish. So how the markets run, they are run by mass mentality. Nobody in singular entity, no single FI, no single DI can move the markets alone. It takes multiple FIs, it takes thousands of crore of money to move the market. So it takes the mass mentality. The mass mentality is required to move the market, right? So when the masses will start thinking that the markets will break this level is at the whole number level. Right? So as soon as 25 broke down, we mentioned in our Telegram group that we can open the target for 25,000, and in the same week, 25,000, the target of 25,000 got achieved, and in our Telegram group, we traded that move also. We were in the monthly triangle also. We were in the swing directional position also. Right. So now, weekly high, the level of weekly high is 25,650 and the weekly low is 24,930. So this is a big range. Yes, I agree that this is a big range. Unless and until markets are in this range, don't try to trade positionally. All right. For me, for week on from weekly perspective, unless the market they go above 25, 500 or 650, I'll not try to go long. No. Even if the markets they show you a bounce on intraday basis, on very, 1 day or 2 day basis, you can play the bounce. But high probabilistic bullish trade on swing basis, positional basis, I told you the level. From swing basis, the bullishness will only come above 25,650. Above 25,650, the first level which you can target is 930 because that was monthly high, right? Why we have marked this 25,930 level? We'll remove that. Okay, fine. I hope you have understood the point. Okay, 900. Yeah. So above 25,650 only, I will think if the markets they close daily. First of all, a daily close has to happen above 25,650. Then and only I'll think because weekly high and weekly lows are very, very important levels from swing perspective. Because now, if you just think from where the selling started, 25,600, 660. So where will be the maximum sellers, call sellers will be accumulated? 25,650, 600. When they will take SL? When at the price which they have sold the call option 25 500 and have 600, it will start getting increased, right? If it will go above the level of 50 60 100, then they will start taking the SL, and when they will start taking the SL, the markets will shoot higher and higher. So that is the logic behind the weekly highs and the weekly lows, and that's why the weekly high and weekly lows are very important. So the weekly high 25 600, one point is keep watching these videos and keep learning as much as possible because at after certain point of time, these levels which I am giving to you, you will be very easily taking out for yourself. You will be just needing the bias, the just the guidance, and just the agility from me. The levels you will be able to find them easily if you religiously watch the videos. Right now, swing bullish only above 650. Above 650, you can target 25,900, 26,000. Above 26,000. 26,000 also I'll mark. Above 26,000, ultra short covering will come till 26,360, but above 26,360, 380, clear cut ultra bullish market will start because this has been, it has been a failed breakout over, I think, for from past, I think, how many, 4 to 5 times. Now, on the downside, the first support we have is 24,920. If 24,920 gets breached, from 920 till 24,600, it will be a straight continuous sharp fall. There is no support. The next support below 920 is 24,600. So now we'll go to daily time frame. What the market has done on daily time frame. See, on from weekly perspective, what we are seeing is the fall has started, but the fall I think will only stop now near weekly 100 EMA. Earlier, I was anticipating that yes, some support might come till weekly 50 EMA, which has come, right? If you see the markets went below weekly 50 EMA, but it has closed above weekly 50 EMA. So the only bullish case now here will start above 24, 25, 660, but where we will get the sign, I'll tell you. I'll tell you a very beautiful thing. See, how do I know that a bullish reversal move has started to come? What I do is I take this big red candlestick and I mark its 50 percentage. Its 50 percentage is 25 300. So what the 50 percentage theory says is if a candle's 50 percentage is being retraced and sustained, there is a high probability that the remaining 50 percentage will also be reached. So 50 percentage level is 25 300. We'll mark this level. 25 300 level. All right. So 25,300 level is also very, very crucial. Now we will go on daily time frame, right? And let's make this as 350, because why, to be more precise, 350 is prior daily high. It's Friday's high. Simple. So as I said, that weekly highs and weekly lows are very important. The same way daily highs and daily lows are very important. Now we have closed below prior daily low. So again, that is a very bearish sign for me, because on Thursday we closed near to prior daily high, but we did not close above prior daily high. Now we have officially closed below 200 DMA also. So that is the second negative point. So from weekly perspective, my bias is sell on rise. Monthly perspective, my bias is on sell on rise. From daily perspective also, my bias is sell on rise. But the tricky part is we have been falling from such a long time. It's a good rally, and we are at 200 DMA, and we are also at a psychological support level. So there is a probability that markets might give you a bounce like this. The markets might try to play this probability, or the markets might try to play this probability. Simple. All right. So we have to be a little bit careful at this point of time in the shorts. I'm not saying that the markets have gone bullish or you have to buy the market, but in my point of view, a technical dead cat bounce for I think 2 to 3 weeks is on the cards like this till 25,650. If at all we start to break back above again 25,650, 700, then I think there might be some chance or some case of bullishness. But unless and until that happens, you cannot go bullish at all, right? The moment we'll break below, I'll mark the prior daily low as 2520. The moment we'll break below 2520 and sustain on hourly level, it is a sign that we are going to 920. So you can capture this 80 points fall, and below 24,920, which is prior weekly low, it will be a sharp fall till 24,600. There is no stop. Literally, there is no support between 24,900 and 24,600. 300 point sharp fall you can catch very easily, right? Getting my point? So let's go to early time frame. All right. So now, early time frame also will paint you a different picture, and I've tried to explain you this W bottom double bottom W based recovery, wherein markets were trying to give you this recovery, but this neckline did not breach 25,900. Same is happening at this point of time. We have this neckline at which level? 25,350, which is also prior daily high. So if at all we cross about 25,350, from 25,350 till 25,600, it will be a short covering. So how will you treat this on the shorter time frame is, now pay attention to this part. This will be this zone, the prior daily range. Treat this zone as a no trading range. Unless and until markets are in these range, please keep the patience. Markets will definitely give you a chance, but unless if we go above 350, earlier I was saying 26,000. I drilled down the time frame. I brought that level to 25,600. We drilled more down to shorter time frame. Now that level is 350. So if you want to play intraday short or intraday longs, the only level, because this whole level will be a level of sideways to volatility. Since a monthly expiry is coming ahead, Tuesday will be a monthly expiry. Next, the markets, whenever the markets will open, it will be a Nifty monthly expiry. We will understand, we will study the option premium, that what are the premiums, what are they indicating, that whether it can be a bullish expiry, whether it can, oh, sorry, whether it can be a sideways expiry or volatile expiry. But this will be a clear, but this range will be clearly a no trading range for us, right? Above this neckline, above 26,350, you can definitely target 25,350, you can definitely target 25,600. But this will be a very, very crucial zone for resistance. Why? Because earlier the markets took us resistance from this point of time. Markets stayed at this point of time at this level, and then it broke down. So this whole zone is a very good resistance zone. So there is a probability that markets might try till this level. And why this seems Probabilistic also because in good bearish runs, there is always a pullback which comes on hourly perspective till hourly 200 EMA. Then markets might try to give you a resistance. So from my perspective, if at all on Monday and on Tuesday, if markets do not break the prior daily low, which is 2520, which is this level, you are poised for this move, and above this, you are poised for this move. But we'll have to be very careful if the markets are forming a negative price action at 25,650 at this level. It means the markets are poised for continuation of the bearish run. But if the markets from traveling from here and they are sustaining kind of here without giving you a fall, it means the markets are poised for more upside. It will be totally dependent on the kind of news flows which start coming in the markets. Right, but the crash kind of fall which we were seeing in the past week, it will continue if the markets reach 24,920, plain and simple. Now we'll discuss on the basis of opening how we can trade the markets. On the basis of opening, if on Monday we open a very big gap up, simple plain strategy, wait for this level to get cleared out, 25,350. We discussed plain and simple about 25,350. The first level which you will see will be 25,500, and above 25,500, 25,500 should be a resistance for some period of time. But if the markets are able to capture that and sustain above it, 650 you can target, above 650, 900. Plain and simple. If at all we are opening a very big gap down, the markets might give you a sharp pullback because the number of shorts in the system is very extreme, very high. And now the bears, since FIs are heavily short in the market, they will try to, bring back the liquidity on the long side. So if at all a big gap, from my perspective, if at all a big gap down happens, it will be quickly recovered till the prior daily close or prior daily high. Right? On Tuesday, a big gap down will not be entertained. From my perspective, this is totally from my perspective, a big gap down won't be sustained because it's monthly expiry. The contracts have to get cut, and we can see a reversal. Right? So if at all a big gap down happens, don't try to chase the falling knife. Let the markets cool down, let the markets come to prior daily close or prior daily high. Then if you are seeing a negative price action on shorter time frame, 15 minutes, 30 minutes, short the market. Simple. If at all markets are opening flat, wait for this range to get cleared out. Wait for this no trading range to get cleared out. Simple. Let's go to Nifty Bank and all right. So from monthly perspective, I think we'll discuss in a separate video, but from monthly perspective, we are at a very crucial point in Bank Nifty because we have uh, chased down more than 50% of this green candlestick, big green candlestick. So it is a high probability that yes, we might go till prior monthly low. We definitely breach prior monthly low, but the next prior monthly low is 57,257,000, right? So the level which I will mark is, I think it's an open sky. So first level of support I'm seeing is at 58,000. Below 58,000, we can definitely target 57,100 and 57,000. Bullish opportunities will only and only come above 59. You can consider above 59,000, but I'll probably consider 59, 200, 220. Bullish opportunities only above this level. So we'll go to weekly level. Now, what we essentially discussed regarding Bank Nifty is if the streets see on monthly time frame, what we were discussing till last weekly analysis is that on weekly point perspective, what we were discussing, that this is a bullish price action. If the market sustain above this level, the markets will try to give you a breakout like this, right? But this did not happen. Why? Because of the sole point we discussed in last week's analysis video is the streets, they did not like banking results, and now we have breached below all the prior weekly lows from where the bank nifty was supporting. So in bank nifty, the fall is just only started, has just only started. right? So for Bank Nifty, the last level of support is this only 58,500, below which also we have closed now 58,600. That was the last support. So we have tried, we have breached this support level. If on Tuesday a reversal is will not come in Bank Nifty, Bank Nifty can give you a continuation fall till 57,500 and 57,000. Simple. Below 57,000, all. And even one more thing, this is the last area of support, this range from 57,400 to 57,200. If 57,200 gets breached on the downside, if you are able to see all these three green candlestick, there is no support below 57,200 till 54,000. So Bank Nifty, traders in Bank Nifty, be very careful on the bullish side. If at all we try to fall below weekly 20 EMA, which is 58,100, short Bank Nifty aggressively. Short till 5700, book half of your shorts at 57,200, 57,400. Wait for a pullback, then again short for big level if 57,200 also gets breached on the downside. Upside, same strategy. Take 50% of this candlestick, mark the 50% of this big red weekly candlestick. What is the 50%? 59,200. Simple. Above 59,200, you can definitely target. Okay, let's go to daily time frame. Right, to be very precise, same case in Nifty 59,300. Above 59,300, first level which you can see is 59,500. But this is a very big red candlestick, and the next target for Bank Nifty will be 58,100, which is 100 EMA. Nifty is at 200 EMAs. Just imagine if Bank Nifty starts to go at 200 EMA, what will be the case for Nifty? Nifty will easily, if Bank Nifty does this, comes till 56,500. Nifty can easily see, I think from my perspective, 24,500, 24,600. And I think this will happen. They will calm down when Bank Nifty also reaches 200 DMA. They will calm down only at that point of time. So to tackle, I think from my perspective, Bank Nifty is bearish. To tackle this bearishness, they will keep IT bullish. I'll show you Nifty IT chart, what they are trying to do in Nifty IT. They will try to save the Nifty from Nifty IT. But Bank Nifty is more bearish than Nifty. I'm telling you. All right. From early perspective, same case, same discussion. If at all Bank Nifty tries to make a double bottom base, W base double bottom recovery, the neckline is 59,300. We have a huge zone for no trading this zone. If the traders who are a little bit risky, they can take little bullish positions above 59,000 till 59,500. But ultra bullishness will only and only come above 59,500. But from my perspective, see, I'll tell you one simple point. Bank Nifty was trading in a range from a very long time. This range has breached down, and what the box theory says is when one box breaks down, equal range of that box on the downside or upside will be achieved. So this level is being achieved at 57,400, which is coming roughly at our confluence level. So I see 57,400 getting achieved in next couple of weeks, right? And which is also the last box, the support for the last box. See, I'll tell you what. This was the last box in which Nifty was trading. Bank Nifty was trading. This box, extend this box here. Now this box has again broken down. Clone this drawing. You can easily target 57,400. Right? Getting my point? So 57,400 below 58,200, 58,000, 57,400 is easily achievable. No doubts in that. Right? Let's go to smaller time frame in Bank Nifty and how to trade. If at all on Tuesday, Bank Nifty is able to save 58,300, which is prior daily low, 58,350. If it is able to save, then I think above 59,000 you can trade for slightly bullish opportunities, but this will be a pure no trading zone. 58,500 and 59,500 points range. All right. Now we will go to each and every other index. Now, if you will see from weekly perspective, it is a kind of a hammer. So they're trying to save Nifty from IT. So Nifty IT is not bullish. So from my perspective, I think Nifty IT you can still maintain a pause range from Nifty IT unless and until Nifty IT does not break this box range, because I'm seeing a bullish price action in Nifty IT. If you see this price action, it is clearly a bullish flag and pole. And once this bullish flag and pole pattern breaks out, I think you can target this level in Nifty IT. But you have to keep patient. So that's why I'm keep patience. That's why I'm saying maintain a pause stance on Nifty IT. Start buying Nifty IT above 39,000. Nifty Auto, damn bearish. Nifty Auto, same is the case for Nifty 50. And this is one of the index which I maintained a sell on rise stance in my last week analysis video also. And still, and why it is falling? Because of Maruti. Maruti, Mahindra, Tata Motors is doing good, commercial and passenger both. But I think auto you can maintain a sell on rise stance. Metal, still I think they are trying to save Nifty using metal. Metal is also on pause as of now because metal has given a beautiful rally. Mid caps with auto, the broader markets are also correcting, and this is one of the larger concerns for me that if at all the broader markets wouldn't have been, wouldn't have gone into correction, I still would have maintained a pause stance on Nifty. But if you see mid caps and small caps, both have brutally fallen in past week. Like it is just pure carnage. So pure sell on rise, but the markets look slightly oversold on smaller time frame. Wait for a 1% pullback like we saw on I think Thursday or maybe I think Wednesday, and then again Friday fall. So wait for a slight pullback, then maybe we can again sell and rise. But unless and until mid caps go back, mid cap 150 go back about 22,000, don't even think to buy Nifty mid select, because you can trade mid cap using mid select index, right? Unless and until we go back above 22,000 Nifty mid cap, don't even think to go bullish. Same is the case for small cap. Unless and until we go above this prior weekly high, 8,500, don't even think to go bullish. Simple. So from overall perspective, small cap sell on rise, mid cap sell on rise, metal pause, auto sell on rise, deep sell on rise, IT pause, banking sell on rise. If at all you see from weekly perspective, banking has just started sell on rise, Nifty sell on rise. So each and every index has given a good correction in the past week, which is indicating that the sell on rise stance will be maintained unless a very positive news comes and the markets, each and every sector, not only the Nifty 50, but also mid cap, small cap, they should, for the bullish case scenario, they should go above prior weekly hand close. Only that can bring bullishness in the market. Other than that, yes, you might argue that some dead cat bounce on smaller time frames might be possible because the Nifty 50 or each and even if you see this one, right, they look oversold in the market. So from my perspective, this is a good price action for monthly expiry, and this rise, they should give this rise, they should give traders the chance to, trade this move, and again, they can make the markets go bearish at this point of time, right? So I have discussed the complete strategy. Now we will discuss the OI data and what bias we can take out from the OI data, right? So the change in OI data. All right, so first we will see that what are the premiums saying. The IV is decent. From my perspective, on both side, there is 100-point premium. So the effective range for the monthly expiry is 100 points on the upside, which is 25 till 25, 200, and 100 points on the downside till 24, 900. We are at 25, 100. So 100 points on the downside till 25,000, 100-point upside till 25, 200. So the effective range is 24, 900, sorry, 25,000 to 25, 200. If at all we maintain this range, and that's what even I am saying this to you guys, if at all we maintain this range from 200 to 25,000, the monthly expiry can happen between this. But if at all we start breaching this, then I think there is no support on the downside and it will be a proper bloodbath because there is heavy resistance on upside, but there is below 25,000. The last support is 24,700 and 24,500, right? So as of now, there is 100 point premium like Nifty straddle is 25,100. It means that we have an effective range of 200 points from 25,100, 100 point on each side being, right? So be a little bit careful about this thing, right? And we'll see the change in Y data. Change in Y data is definitely bearish with 4 CR of shorts addition and 64 lakh of longs addition. But this is monthly expiry rollovers are also part of this. So we will also take into consideration of 3rd Feb. 3rd Feb, it has seen also the more number of shorts being added, but it is not that much aggressive. Slight support is at 25,000, but very sharp resistance at 125, 100, 200, 300. Biggest support is at 25, 500. So if the markets wants to trap each and every call seller, it might give you a pullback till 25, 500. Let's see that how the traders they position themselves just before the budget session. I'm again iterating that in the budget session on Sunday, the markets are open, right? So from this perspective, the monthly expiry, okay, total open interest for 27 Jan is we have a decent support of 25,000. Do not forget that. And we have a decent resistance at 25,200. And that's what OI data is also suggesting, but there are more number of shorts in the system, which gives me a bearish stance. But if 25,000 breaks down, 24,700 is the support after that, right? Bank Nifty, change in OI, ultra bearish, 31 lakh shorts have been added, 1 lakh of longs have been unwinded. Total open interest, we have major support at 58,500. Nifty Bank is at 58,400. We have decent support at 58,500. If this gets breached down, 58,000 and 57,500. That's what we discussed, right? So from even OI perspective, the scenario looks bearish to me. I don't think that markets will be able to open a big gap up on Monday because these OI data, right, they do not let the markets open a good gap up, right? Because if they let the markets open a big gap up, they might be the big money might be trapped into, short covering. That's why they do not do that. Right. So this was a complete discussion, right? And on Nifty, Bank Nifty, how we can, uh, trade the next week from an overall perspective. My stance will be sell on rise after seeing the OI data, after seeing each and every index. My stance will be still sell on rise, but a small dead cat bounce due to monthly expiry might be in the cards. So I have told you exact each and exact level on Nifty 50 that above this level can come, and below this level can come. Clear? Now let's discuss gold. Feb futures have started to go illiquid because Feb expiry is very much near. But gold has been running on positive side. Some exhaustion on the bullish side is clearly evident from Friday's candle. So we will definitely mark the high and the low of both daily candlestick. Below this, you can target this and this. Above this, it's an open ground above 163, 1,63,000. You can definitely target 1,65 and 1,70. Simple. But below 1,60,000, you can target 155, and below 150, we can target 152. Big support for gold will be around 145, 140, 145, 142. So gold, if at all this is a real exhaustion on the bull side, gold might give you a fall like this, then a pullback like this, and then a correction like this. All right. But be careful on the long side because it is clearly evident that this is and we have officially closed our prior daily high, but this is a sign of exhaustion. This is a doji. It means the traders and doji with the equal volume. So if at all you will go on lower time frame, the selling volume on hourly time frame is increasing. It means the sellers are returning. So be very careful in longs, over leveraged longs. Still, from daily perspective, weekly perspective, the closing is still ultra bullish. If from weekly perspective, if you see, it is a ultra closing, ultra bullish closing. But on the shorter time frame, some breaking signs, some bearish, bullish exhaustion signs have started to come. So be careful, be little bit careful with gold longs at this point of time. Silver, I think Feb futures closed on, you know, now in charts like this, what should I discuss? Even if it tries to break prior daily low, it will be bought. So simple, keep a simple strategy above three prior daily high, above 342, target for 3 lakh 50,000, 3 lakh 75,000. But bearish scenario will only and only come below 3 lakh 7,000. Below 3 lakh 7,000, target for 3 lakh, target for all these levels, right? Good shorting opportunity will only and only come below 328 level, below 328 because this will be the 50% retracement of the daily candlestick or weekly candlestick, right? So maintain from weekly perspective, it is ultra bullish, but since if you go on the shorter time frame, but in silver, I cannot see any exhaustion. Unlike gold, there is no exhaustion in silver, but it is highly overstretched. Till the point it is running, it will give benefit to all the bulls, but the moment it will start falling down, it will fall down very severely, right? So stay careful in silver longs also. But gold is looking more exhausted than silver. So if you want to short gold, short below only March futures I'm talking about, not Feb futures because they have started to trade very much near their expiry, near its expiry. Only short, only and only short. Try to short gold in small quantities first at this point of time. If you get good continuation, keep adding quantities as the gold falls. Crude, if you want to discuss crude, crude has given a very good bullish closing on Friday, but on Thursday it gave a good bearish close, but it reversed. For from my perspective, if you want to trade crude, I think maintain a buy on dip stance. Let a dip because crude now, what crude does is crude always moves in a wavy pattern like this. So whenever you will see like this, you will also see a downfall like this. So try to add some longs around this level. 55 500 whenever it retraces back from 5600, try to add longs around 55 500 level for if crude starts to cross prior weekly high. Crude might above 5650, 5700, 5800, and 6000. Crude might also give you a good short covering. Natural gas, it is already up more than 50% in last 2 to 3 weeks. So it is also, very dangerous to be in leveraged longs. But rather, we will not choose to discuss. Okay, we'll once see its chart, right? See, exhaustion is clearly visible, and what natural gas can do at this point of time is clear. Cut pause, it can do like this. So better to avoid natural gas unless and until it breaks these levels. Right? I'll mark you these levels. Above 340, you can target 350 and 375. But wait for a slight pullback at this point of time, like this. Let the markets cool down till the prior support. Try to enter around 300 for 375. Simple. All right. This was the overall discussion for the markets for even the commodities as requested by some users and for Nifty 50 as well. Thanks for watching the video. If you have been watching up till this time, thanks for watching this video. And I hope I have helped you in some way. And stay safe in the markets. Cheers. Good evening.